Welcome back, everybody, to another deep dive. You ready to go deep on this one?
Always am. Let's do it.
Today, we're cracking open The New Market Wizards
Yeah.
by Jack D. Schwager. I mean, this book is jam-packed with interviews from some of the top traders in the U.S.
Some real legends in there.
Absolute legends.
Yeah.
And we're going to try to extract like those golden nuggets, those little trading secrets to give you a feel for what it really takes to succeed in the markets.
Yeah, Schwader did a fantastic job getting these guys to open up about their process. You really get a sense of like their individual styles and their unique approach to the market.
Right? It's like getting a backstage pass into their minds.
Exactly.
So the first thing that just jumped out at me was how much emphasis these traders place on mindset. It's not just about having a winning strategy. It's like they all say you got to have the right mental game too.
It's so true. Like two of the traders featured Krauss and Faulkner. They work with traders specifically on the psychological aspects of trading.
Interesting. So what do they say? Like, what are the common pitfalls?
Well, they argue that a lot of people are drawn to trading for the wrong reasons. You know, the allure of quick riches or the thrill of the gamble.
Yeah, chasing that dopamine hit.
Right. But those motivations, they say, that's often a recipe for disaster.
It makes you wonder then, what are the right reasons to get into trading? You know, when I first started trading, I actually found it to be incredibly calming.
Really?
Yeah, I know that might sound a little strange,
It does a little.
but it felt like solving this complex puzzle,
Hmm.
you know? And it really forced me to confront some of my own internal conflicts.
Oh, I could see that.
Like if your head's not in the right place, the market will expose those weaknesses in a heartbeat.
Absolutely. Several of the traders in the book, they talk about that too, like Faulkner, Basso, Steidlmeyer. They all emphasize staying detached, observing the market objectively without letting your emotions cloud your judgment.
So it's all about having that calm, almost Zen-like approach.
Pretty much.
But how do you actually develop that kind of mental discipline, especially when you're staring at a losing trade?
Well, I think one of the key takeaways is that successful traders are incredibly adaptable. They're not afraid to admit when they're wrong, and they cut their losses.
Makes sense.
Sperndeo, he's a veteran trader. He talks about this very frankly. He says professional traders don't go broke from big losses. They go broke from clinging to small profits.
It's like that saying, the first loss is the best loss. Sometimes it's better to take a small hit and move on rather than letting your ego get in the way.
Exactly.
You know, that reminds me of something that happened to me a while back. I was totally convinced that the Japanese yen was going to rally. I'd done my research. The charts looked good. I even talked to this well-known trader, and he agreed with me.
Sounds promising. So what happened?
Well, life happened. I had to go on a trip. And by the time I got back, the yen had tanked. I was curious. So I called the trader to see what he thought. And guess what? He had already gone short the yen, and he was making a killing.
Wow, that's brutal. But it's a great lesson. You have to be willing to change your mind based on what the market's telling you. Your analysis might be perfect, but if the market doesn't agree, you have to adjust.
It's like you have a plan, but you're flexible enough to deviate from it when necessary.
Exactly.
Speaking of plans, let's talk about building a winning approach in the first place. You know, I was surprised to see there's no one-size-fits-all strategy in this book. These traders use everything from fundamental analysis to complex quantitative systems.
Right. That's one of the key takeaways for the listener. What works for one trader might not work for another. The key is to find an approach that fits your personality, your risk tolerance, and your understanding of the market.
So true. Some traders like Driehaus, they're all about finding undervalued growth stocks. Others like Trout, they focus on building these robust quantitative systems.
Right. And that brings us to the concept of having an edge. Trout really hammers this point home. He says, and I quote, "You have to have an edge to beat the markets. Everything else is secondary."
So then what is an edge?
It's something that gives you a higher probability of winning. It could be meticulous research, a unique methodology, even something as simple as low transaction costs. It's understanding what gives you an advantage in the market.
Okay, I get it. So Trout had an advantage as a floor trader with access to information and low trading costs. But what about the average investor? How do they find their edge?
Well, it starts with understanding your strengths. Are you good at analyzing financial statements? Do you have a knack for spotting patterns in charts? Maybe you're a whiz at building algorithms. Once you identify your strengths, then you can start to develop an approach that capitalizes on them.
Right, so you've got a good idea now.
Well, it's not enough to just have a good idea. You have to test it. You have to refine it. Eckhart, he's a trader who relies heavily on quantitative systems. He stresses the importance of rigorous testing.
Okay.
Don't just jump into the market with a half-baked idea. Test your strategy. Simulate different market conditions. Make sure it holds up before you risk real money.
It's like building a car. You wouldn't just design it and then drive it off the assembly line without testing it first. You'd put it through all sorts of rigorous trials to make sure it's safe and reliable.
Exactly.
Okay, so we've talked about mindset, we've talked about building an approach, and we've talked about the importance of having an edge.
Yeah.
But what about managing risk? That seems to be a recurring theme in this book.
Absolutely. It's essential. Let's dive into that next because this is where it gets really interesting.
Okay, all right.
So Driehaus, he challenges this myth of consistently making 20–30% returns.
Yeah, you see that everywhere.
You see it all the time. But the reality is even the best traders experience periods of underperformance and drawdowns.
You can't expect to win on every trade, and you certainly can't expect to hit those sky-high returns all the time.
Right. And Sparandeo's story about pulling profits out of his account even when he was doing incredibly well, that was a real eye-opener for me.
Yeah, it's a powerful lesson in protecting your capital.
No matter how tempting it is to keep riding a winning streak, diversification is key to long-term success.
And Sprandeo clearly understood that. He wasn't just focused on maximizing gains on a single trade. He was thinking about protecting his overall wealth.
Exactly. He was playing the long game.
And that brings us to another interesting concept from Druckenmiller: varying your bet size based on your conviction.
Right. When you have a high degree of confidence in a trade, don't be afraid to go for it, to really capitalize on the opportunity.
So it's not about randomly sizing your bets. It's about carefully calculating how much to risk based on the potential reward and your level of certainty.
Precisely. When you have a strong edge and high conviction, that's when you can really push your advantage.
So it's about being bold, but in a calculated way. You're not just gambling. You're making strategic decisions based on your analysis and your confidence level.
Exactly.
Now, we've talked about mindset, finding your edge, and managing risk. But what about those counterintuitive lessons? The things you wouldn't necessarily expect from these market masters?
Like what?
Well, I'm thinking back to my experience with the yen.
Ah, yes. That's a perfect example of the dangers of blindly following advice, even from successful traders.
Right.
You have to develop your own independent judgment.
Absolutely. And speaking of unexpected insights, Roshka, she's a master of short-term trading. She talks about catching just part of a move.
Interesting.
It's okay to exit a trade when the market tells you to, even if you haven't hit your profit target. Sometimes taking what the market gives you is better than holding out for that perfect exit.
Right. It's about being adaptable and recognizing that the market doesn't always behave the way you expect it to.
Exactly.
Yeah.
And speaking of acting decisively, Liv Schip's story about the G7 meeting trade highlights the importance of seizing opportunities when they arise. He was on vacation, heard about a potential market-moving event, and ended up making a fortune.
I remember that one. He even traded for 6 hours straight from a hotel room in Sardinia. His assistant was back in New Jersey, sick as a dog, but they pulled it off.
Wow, talk about dedication. But not all trades are going to be winners, right? Another unexpected lesson was Driehaus's perspective on embracing losses. He says that losses are inevitable even for the best traders. But instead of letting them get you down, you use them as learning opportunities.
Yes, and Sperandeo adds to that. He says that being willing to admit you're wrong is a hallmark of successful traders.
It takes humility to acknowledge a mistake, but it's the only way to learn and grow.
For sure.
So it's about separating your ego from your trading decisions. You have to look at your mistakes objectively without letting them damage your confidence.
Absolutely.
Speaking of the inner workings of the mind, I found the discussions about the subconscious mind in this book absolutely fascinating.
Oh, yeah. Krauss's work with hypnotherapy and Faulkner's insights into NLP, they really reveal how much our subconscious mind influences our trading.
Krauss even argues that the subconscious can sabotage our best-laid plans.
Oh, yeah. He tells this amazing story about a trader who kept losing money because deep down he was trying to sabotage his wife. His subconscious was working against his conscious desire to succeed.
Whoa, that's wild.
Yeah.
But Faulkner also suggests that we can reprogram our subconscious for success using NLP techniques.
Right. It's about identifying those negative thought patterns and replacing them with positive, empowering beliefs.
So it's not just about positive affirmations. It's about shifting those deep-seated beliefs that drive our action.
Exactly.
So we've covered a lot of ground today. Mindset, strategy, risk management, and even the power of the subconscious mind. What does it all boil down to? What's the ultimate takeaway for someone who wants to master the art of trading?
I think Rushdie sums it up perfectly when she says trading is a craft.
I like that.
You have to approach it with discipline, practice, and a willingness to constantly learn and improve.
And just like any craft, it takes time and effort to develop mastery.
Absolutely. And confidence plays a big role too, right?
Yeah, it does. Ritchie, another trader in the book, he observed that confident traders tend to be more successful. He witnessed this firsthand on the trading floor. Those who acted decisively and trusted their instincts, they tended to come out ahead.
But it's not just blind faith.
No, confidence has to be rooted in experience and a solid understanding of the market.
Right. And speaking of experience, Ritchie also emphasizes the importance of finding mentors, but ultimately trading independently.
Hmm.
You can learn from the best, but you have to develop your own unique style and make your own trading decisions. It's a solo journey in the end.
So we've journeyed through the minds of some of the greatest traders in America. We've absorbed their wisdom and gleaned insights from their experiences. What are your final thoughts for our listeners today? What should they take away from this deep dive into the new market wizards?
Well, I think the market wizards might have different approaches, but they all agree on one thing: the importance of having an edge, something that gives you a higher probability of winning in the market. And that brings us to the most important question. What's your edge? What sets you apart? It's time for some serious introspection.
That's a powerful question. And as we wrap up this part of our deep dive, I encourage you to really think about that. What makes you unique as a trader?
Right.
What are your strengths? And how can you leverage those strengths to develop your own edge in the market?
I think that's a great place to leave it for now.
So, as we were just talking about finding your edge, it reminded me of something else Eckhart mentioned in the book. He talked about the importance of understanding fat-tailed distributions in the markets.
Oh, yeah, that's huge. It's a crucial concept for risk management. Basically, it means that those extreme events, those black swan events that nobody sees coming, they're more common than traditional risk models would suggest.
So it's not enough to just rely on standard deviation or other statistical measures. You have to be prepared for those outlier events, the ones that can really shake things up.
Exactly. You can have the best strategy in the world, but if you're not properly managing your risk, a single unexpected event could wipe you out.
Yikes.
Trout, the floor trader, he really drives this point home. He says that risk control isn't about being timid. It's about making sure you survive to trade another day, even when things go horribly wrong.
Right. It makes you think about all those stories you hear about traders who blew up their accounts because they took on too much risk. They might have had a few winning streaks,
Right.
but then one bad trade and boom, they're out of the game.
Yeah, that's why it's so important to have a robust risk management plan in place. You need to know how much you're willing to risk on any given trade. And you need to have a plan for what you're going to do if things go against you.
So it's not just about maximizing profits. It's about protecting your capital. And that ties back to what Sprandeo said about withdrawing profits. Even when he was on a roll, he was disciplined enough to take some money off the table to diversify and protect his wealth.
He was playing the long game. He wasn't just focused on the next trade. He was thinking about his overall financial well-being.
Right. It's like the difference between a sprinter and a marathon runner.
Oh, I like that.
The sprinter is all about speed and explosiveness, while the marathon runner is focused on pacing and endurance. And you need both qualities to really succeed in trading.
That's a great analogy. You need the ability to seize those opportunities when they arise, but you also need the discipline to manage your risk and stay in the game for the long haul.
Let's switch gears a bit and talk about something that really intrigued me. The role of the subconscious mind in trading.
Okay.
Krauss, who uses hypnotherapy with traders, he suggests that our subconscious can actually sabotage our best efforts.
It's true. Our emotions and beliefs, they can have a huge impact on our trading decisions, even if we're not consciously aware of it.
Yeah, and sometimes those subconscious beliefs can work against us, leading us to make self-destructive choices. It's kind of scary when you think about it.
It is.
Uh,
So how do we combat that? How do we make sure our subconscious mind is working for us, not against us?
Well, Faulkner, the NLP expert, he suggests we can use techniques like neuro-linguistic programming to reprogram our subconscious for success.
Okay.
Now, for those of us who aren't familiar with NLP, can you explain what that is and how it works?
Sure. NLP is basically a set of techniques for understanding and changing our thought patterns and behaviors. It's based on the idea that our language, thoughts, and actions are all interconnected. So by changing our language and thought patterns, we can change our behaviors and ultimately our results.
So in the context of trading, it's about identifying those negative thought patterns, like fear of loss or self-doubt, and then replacing them with positive, empowering beliefs.
Exactly. It's about shifting your mindset from one of scarcity and fear to one of abundance and confidence.
So it's not just about repeating positive affirmations over and over again. It's about actually changing those deep-seated beliefs that drive our actions.
Right. It's about rewiring your mental circuitry to support your trading goals. Imagine a trader who's constantly worried about losing money. That fear might cause them to hesitate to second-guess themselves or to exit trades too early.
Yeah, they might even miss out on opportunities because they're too afraid to take a risk.
Exactly. But by using NLP techniques, they can start to identify and challenge those negative thought patterns. They can reframe their perspective on risk, focusing on the potential rewards instead of just the possibility of loss.
So it's about shifting your focus from what you could lose to what you could gain.
Precisely. And that shift in perspective can make a world of difference in your trading performance.
Okay, so we've talked about mindset, strategy, risk management, and even the power of the subconscious mind. But what about those more practical aspects of trading? Things like finding a mentor, developing a trading plan, keeping track of your results.
Right. Those are all crucial elements of successful trading. Remember Richie's advice. Find mentors, but ultimately trade independently. Learning from experienced traders can be incredibly valuable, but you also need to develop your own unique style and make your own trading decisions.
It's about finding that balance between learning from others and trusting your own judgment. What about developing a trading plan? That seems to be something that a lot of successful traders emphasize.
Absolutely. A trading plan is like your roadmap to success. It outlines your goals, your trading strategy, your risk management rules, your overall approach to the market.
It's like having a business plan for your trading activities.
Exactly. And it helps you stay disciplined even when emotions are running high. Having a plan in place can prevent you from making impulsive decisions based on fear or greed.
So it's not just about having a plan. It's about sticking to the plan even when things get tough.
Right. And finally, remember what Rashke said. Trading is a craft. It takes time and effort to develop mastery, and part of that process involves tracking your results, analyzing your trades, and constantly learning and improving.
It's about being a student of the market, always seeking to refine your skills and deepen your understanding.
Right. And that brings us back to the question we posed earlier. What's your edge? What are you doing to develop your craft and gain an advantage in the market?
It's a question worth pondering. And as we wrap up this part of our deep dive, I encourage you to reflect on your own trading journey. What are you learning? What are you struggling with? And most importantly, what steps are you taking to become a more skilled and successful trader? It's amazing, isn't it? We've been talking about all these different aspects of trading, mindset, strategy, risk management. I keep coming back to this one central theme.
Yeah, what's that?
It's all about finding that balance, the balance between discipline and flexibility, confidence and humility, taking risks and protecting your capital.
It is like walking a tightrope.
Exactly. You need to be focused and disciplined to stay on that rope.
Right.
But you got to be flexible and adaptable too. Adjust to the wind, the swaying of the rope.
And you need the confidence to actually step out onto that rope in the first place.
For sure.
But also the humility to know that you might stumble or even fall.
It's a delicate balance. And it makes me think about something else Rashka talked about, the importance of reviewing your trades.
Oh, yeah. Not just celebrating the wins, but really dissecting those losses.
Right, to figure out where you went wrong.
Exactly. She made it a habit to analyze every single trade, looking for patterns in her successes and her failures.
It's like having this constant feedback loop, helping you refine your approach and become a more disciplined trader.
It's about turning those losses into learning opportunities. Instead of getting discouraged by a losing trade, you use it as a chance to get better, improve your skills, refine your strategy.
It's all about that constant self-improvement.
Yeah, that relentless pursuit of mastery that we keep talking about.
Becoming a student of the market, always seeking to deepen your understanding.
Exactly. And speaking of learning from your mistakes, remember what Sperendeo said? It takes humility to admit when you're wrong, but it's the only way to learn and grow as a trader.
You got to separate your ego from your trading decisions.
Right.
Be able to look at your mistakes objectively, without letting them damage your confidence.
It's about having that growth mindset, the belief that you can always learn and improve no matter how experienced you are.
I love that.
Yeah.
And something else that really resonated with me was this idea of keeping trading in perspective.
Oh, yeah.
It's so easy to get caught up in the day-to-day, the wins and losses.
Right.
But as Basso wisely reminds us, it's just a game.
He's got a great way of putting it. He says, view your life as a movie. You experience the highs and lows with intensity, but also with a sense of detachment. Don't let the market consume you. Because as he says, the universe will still be there tomorrow.
That's such a good point. Trading can be so many things.
Yeah.
It can be exhilarating, Challenging, frustrating, rewarding,
It can be all of those things.
but it shouldn't define you.
Right.
It's important to have other interests, other passions,
Yeah.
other things in your life that bring you joy.
Exactly. Trading should be a part of your life, not your whole life.
Couldn't have said it better myself. So as we wrap up this deep dive into the minds of the market wizards, I think the key takeaway is this. Success in trading is not just about strategy. It's about psychology, discipline, and finding your edge.
It's about developing that winning mindset, mastering the art of risk management, and always seeking to improve.
And most importantly, it's about finding that unique edge that sets you apart, that gives you a higher probability of winning in the market.
If you're ready to embark on your own trading journey, or if you're looking to take your trading to that next level, I highly recommend checking out The New Market Wizards. It's full of inspiring stories and practical wisdom from some of the greatest traders of our time.
And as you continue on your trading journey, always remember to ask yourself, what's my edge? What makes me unique as a trader? And how can I use my strengths to achieve success in the markets? Until next time, happy trading, everyone.